Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, April 5th. It is hump day. We are midway through the week and the third day in both the quarter and the month. So looking at DXY as we typically do, you see the lines for the Trade the Chain community this morning. We did mention yesterday that, dipping down into that 101 level, we are near where we would expect supports to form. But look at where the previous daily close was as well. It was right at the low that we experienced within the 18th of January and the 23rd of January before we had this deviation lower, which then brought us back up for, an interesting February. So we closed right at that level. Now we're kind of moving higher. And of course, now our resistance is basically this 101.9 to 102 area, judging by, the lows from this wick, and then obviously the equal lows from back in late March. So this is where you would expect either acceptance or reversal. So if DXY is beginning to reverse, it's beginning to work its way up to low 102, and it's starting to get to the 102.5 area, which would signal potential full reversal. So if we are moving towards the mid 102 level, then I would expect risk assets to take a bit of a hit and or just consolidate at the very least. Now, if this ends up getting cut back down at the 102 level, 102.1 maybe, and heads back down to the low 101.2, then risk maybe we're obviously seeing a bit of a sell-off today in risk. Then maybe risk recovers heading into the end of the week. And just to give you a bit of an explainer about why we're seeing that, other than the dollar just being at support and equities and risk and crypto being at resistance, is we did have the PPI number or PMI number. So they came in lower than expected. So this is basically the gauge for services production, or services, kind of value creation, depending on how you want to say that. And obviously, we want this to head higher. It just headed lower, missed expectations greatly, and that's why we saw a lot of the sell off today. I had more of a focus on the ADP employment numbers, which, if you recall correctly, came in much lower than expected as well, which leads me to believe we're probably going to see a rise in the unemployment rate, because look at your job openings down 600K and your employment numbers are down 100K. So it definitely seems like unemployment is going to shock to the upside. I was more focused on that ADP employment numbers, but it seems like market was more focused on PMI today, and obviously the ISM services index lower as well. So bad signs for production and manufacturing, but that could just be a snap reaction and if the unemployment report comes in higher than expected, then I do believe that maybe markets see an immediate shock, kind of like we saw earlier on Tuesday, where we sold off and then we rose after this number. But I'm kind of feeling the same way on Friday, but obviously the focus on the PMI rather than the employment numbers today was a bit of a surprise to myself. But fortunately, we did tell the TTC community, if we go ahead and look at our information, is that, given the boost yesterday, I would proceed with caution today. Why is this not highlighted? Given the boost yesterday, I would proceed with caution today. Typically, bullish price action into the open will be sold off into lunchtime, at least, which is what happened yesterday. We are experiencing selling at the open right now. So, exactly the outlook that we gave the TTC community. And again, if you're watching, if you're not the TTC community, you're missing out on literal free trades every day. Well, not free trades, because it is a paid service, but DXY, directionality and explanation, equities explanation, Bitcoin explanation, ETH explanation. So trades every day with triggers. So here's your if, and there's your then. Here's your if, there's your then. So easy trade triggers every single day in the TTC community. So that should be, that much should be obvious to everyone now. But the reason we saw a little bit of sell-off today, clearly because of PMI. So looking at equities, obviously sold off. We broke the low. So the Monday's range has now been broken. So the high for the week right now is 41.41. Low is 40.70 for the week now. And I would bet that would probably drip down to 40.60 just based on this rejection here. And the fact that we've been playing off the hourly 200 estimated moving average quite a lot in mid to late March. And we have not tapped it since the end of March. So we've just been hovering above. I would expect 4060 to probably get tagged. If 4060 is getting tagged, maybe crypto takes one more leg down, or Bitcoin just consolidates in the current range. So we basically, the easy trigger today was above the VWAP, you're good. Below the VWAP, you're not good. So, very clear trading. We obviously told the Trade the Chain community that. I hope some people made some money. And now, I would say just, very similar to, looking at DXY. DXY kind of formed the same thing. It bounced, it moved up. Now it's, now it's at where the recent lows were. We look at equities, bounced. Now it's at where the recent lows were. So very interesting price action here between DXY. And obviously we're looking at the hour for equities and 12-hour for DXY. But you're seeing very similar market patterns appear. So you can use this on various charts. So if you're bullish, you're waiting for an acceptance above the lows. If you're bullish, you're waiting for an acceptance above the lows. Else you're shorting the low tap with the goal of shorting down to support, which was previous resistance at 4060. So very simplistic there. And then again, if we do end up recovering and get above the VWAP, then I'm long, because typically if we get above the VWAP, we test the VWAP, we ended up heading high. That's just, typically how the market works. So that is how I'll be looking at my trading for equities. And of course, still using equities as a weather vane. So if equities are dripping, then I'm probably expecting crypto to drip or just consolidate in the current range, which means no bullish price action. If equities do become bullish, then I'm looking at crypto in a bit of a different light. So looking at Bitcoin, also very simple. When we actually opened up and we dropped pretty low, but the clear number was obviously the previous low from the 5 a.m., which would be 8 a.m. Eastern. So 28.3 was that magic number. Then we dropped down to the VWAP. Obviously, VWAP did not act as support at all, and we pretty much sliced right through it. So we had the drop, we retested it, then dropped lower. Got underneath the estimated 200 moving average. Now we're beneath that. So we're beneath the estimated 200 moving average, and we're beneath the VWAP now. So unless we reclaim these, it is a short. So if you can get above it and retest it, that's a long. So let's draw our stuff. Above it, retest it, long. Above it and accept back lower, short. Get rejected, don't even get above it, can only get up here, that's a short as well, in my opinion. So, and then if you do short it and we continue to hold at the recent lows right here, and we end up then recovering back here, then you have a better chance of looking at it as a potential range and then, factoring in the breakout. So the range would be right here, and you're just moving up and down here, and then you're shorting resistance and you're longing supports until something breaks out and you maybe get lucky or just time the trade correctly. So there you go. And then obviously the weekly lows that we have right now are down to 27.2. So a sweep of the weekly lows is always plausible. Typically these will get met. And if we kind of look at the previous, we never reswept these lows, which was interesting enough. Of course, it doesn't have to happen. But when we did move up here and we had this, this trading action on Friday, we did sweep that as soon as the week opened. So we did sweep, some of the lows heading into the later end of the week, but these lows have been untouched, as have these lows and this number from previous ranges. So not saying it won't get swept, but typically, especially if you're unable to break above as many times as we have, you will end up sweeping those lows before another potential attempt higher. We've seen this plenty of times in Bitcoin's history. I will say the one good thing about Bitcoin right now is the fact that it's holding this mid-range extremely well. So since we broke above it on the 28th, it's only dipped below it for a couple hours at a time, as low as just a couple minutes at a time. So this is certainly your the one thing you want to cling to is that this 27.7 number, maybe as low as the 27.6, 27.5 is holding up, because that's certainly good that we're hanging out in this area of the range and keep bumping up here. But the worry is that enough taps, you're going to start bumping a little bit lower if you can't breach the highs. So definitely something to consider there. But again, the way that I'm looking at this trade, continual rejection up here, you short it back down to at least the lows or potential recent lows, you break above the VWAP, you're long. So looking at Ethereum, and just to kind of give you some context, the ETH BTC that we've been waiting for this for days and days and days. Since mid-March, we've been waiting for this. So we are officially above the meme line. So, now that, we did see some relief from alts, but, look, the downtrend is actually going to line up with the 1-day estimated 200 moving average, which we know will be a critical point. And we are at the previous lows from February and January. So judging by the exact same trading that we're looking at here, we need to accept above those lows before you can feel comfortable and long. So right now, fantastic attempt at ETH Bitcoin to recover. And we obviously saw alts have a little bit of fun yesterday. Certainly not alt season yet. Definitely saw some fun. So if this can reclaim above the lows, then I think we're good. And then you would potentially talk about maybe getting cut down around, this trend tap or a estimated 200 moving average trend tap. But right now, if you were long this, now is the time to rethink your longs and potentially hedge for a sell-off that may come here. And if that happens, then Bitcoin is obviously performing better than both Ethereum and alts. But right now, Ethereum has been performing well, but we have to judge the context that may change just based on where current trading is. So the moral of the story for ETH was obviously very early this morning. The previous low for the morning, very similar to Bitcoin, was at 1900, 1896 level. So obviously get below that, you're pretty much tagging the 1890 level, which was quite obvious. We've started sending out daily emails to all of the TTC members. So if you're not in the community, now you'll start getting a daily email of this information. So you should have received that today, tomorrow, and then it start every single day. So we kind of had to reformat some of these lines because we sent that out at about 8 a.m. when I put the data out around 6 or 7 a.m. So this is all Pacific time, but that will come out a lot earlier tomorrow and onward. But very simple in terms of support. If you were short from this level, you were shorting to support, which was obviously the previous high. Previous high was 1888, 1890. Now we are recovering at that level, and you basically want to reclaim the low which we have so far of 1896. Now we want to get back up to 1905, and then you can start talking about getting back up there. And then obviously if you very similar to what we talked about Bitcoin, we could head back down and retap support one more time. So we could actually, I'm just going to go ahead and get rid of this line. So let's draw some fresh ideas. So drop back to support, head higher, drop back to support, break it, head lower. First stop would be the previous daily close. Next stop would be the VWAP as well as where that support is. But I would say the VWAP is a little bit more important in that context. So if you lose the recent low of 1884, probably headed down to 1870, lose 1870, you're headed down to the VWAP, which is right now around 1850. So, and then, we're looking at the same thing for Bitcoin. If we drop down here, we're at 27.7, which also, I guess the easiest way to say it is if you drop from here, this is where you're going right here. So this is where I would expect some price action trigger. And then you could potentially get a wick all the way down here, very similar to that, before trying to pull a mean reversion. But I will say nothing about current price action makes me bullish or excited, at least in the near term. And my estimate would be that this ends up getting rejected off of the estimated 200 moving average and the VWAP, and we likely head back down to tag some of these lows from earlier in the week, which in this case would probably be Ethereum in this mid range or Ethereum in this low range. And it does look like equities may end up tagging 4060. So looks like maybe a bit of a bearish day, but I'm still not a bear macro. So, good days are going to be met with bad days, and unfortunately crypto can't break out. So, there is a broader concern of the fact that Bitcoin is still unable to break out of 28.6K, but it is still, of course, like I said, hovering around this top half of the range. Which is really more, it's been hanging out in this range for quite some time. It's still been drifting higher, still been making higher lows, and we're still, in this top half of the range area. So all of that is certainly a good sign. But if we do breach this level and tag recent lows and do not recover, then obviously the narrative starts to shift a little. So if I were you, I'd proceed with caution today. I don't know if looking for longs prior to the daily close is going to be the most beneficial option, but starting to get a little bit oversold, but I'm still not really enjoying this price action just based on the key level rejection. So if I were you, unless you're shorting, maybe take the rest of the day off, come back tomorrow, because typically if we're purchasing into the US Open, we sell off. If we're selling off into the US Open, maybe we're getting bought back tomorrow. So very something to consider in terms of the greater context of trading. So good luck, happy trading, and of course, speak to everybody in the TTC community.